Imagine waking up one morning, opening your banking app, and realizing your money isn't just numbers in an account. It's a government-issued digital token that can be tracked, limited, or even switched off. Every payment you make, every donation, every subscription you cancel or keep, instantly visible to a central authority. Some people say this is fear-mongering. Others say it's exactly where the global financial system is heading with CBDCs, Central Bank Digital Currencies, and with digital ID systems that connect your identity to every transaction. Tonight, we're cutting through the noise. No hype, no doom porn, but also no blind trust. What exactly are CBDCs? How do they differ from crypto and from the money you use today? What is digital ID? And why are governments and big organizations pushing it so hard? And most importantly, what does all of this mean for your freedom, your privacy, and your future? Let's dig in. In this video, we're going to break down CBDCs and digital ID in a way that's clear, practical, and grounded in facts. You'll learn how these systems work, why central banks and tech companies are investing billions into them, and what realistic scenarios, both positive and negative, might unfold over the next decade. We'll explore privacy, surveillance, programmable money, social control, financial inclusion, and what choices ordinary people still have. By the end, you'll be able to recognize real threats, spot exaggerations, and think strategically about your own money and data. If you care about the future of cash, personal freedom, or investing, you'll want to stay with me right till the end. We'll finish with concrete steps you can take to stay informed and prepared. And if you find videos like this valuable, consider subscribing and hitting the notification bell so you don't miss the next deep dive on the shifting landscape of money and power. Let's start with the basics. What is a central bank digital currency? A CBDC is not Bitcoin, and it's not just your regular online banking. Today, your bank deposits are digital entries created by commercial banks, backed indirectly by your country's central bank. Cash, on the other hand, is a direct liability of the central bank. A CBDC combines aspects of both. It's fully digital money issued directly by the central bank like cash, but existing only as bits on a ledger. There are two main models: retail CBDCs, used by everyday people and businesses, and wholesale CBDCs, used only between banks and financial institutions. Most public debate focuses on retail CBDCs because they could replace or greatly reduce the role of physical cash. Key point: a CBDC is programmable and traceable by design. That's the source of both its promise, efficiency, inclusion, and its danger, unprecedented financial surveillance and control. Now, digital ID. This term sounds harmless. After all, we already have passports, driver's licenses, and social security numbers. But digital ID is more than a photo and a number. It's a unified, often biometric-based identity system that can plug into banks, health records, travel, social media, and government services. In many proposals, your digital ID could be used to log in everywhere, verify who you are, and sign legally binding documents. It might include your face, fingerprints, or iris scans. Supporters say this streamlines bureaucracy, cuts fraud, and makes services more accessible. Critics warn it creates a single point of failure and a powerful tool for tracking, scoring, and controlling citizens. When digital ID gets connected to a CBDC wallet, you effectively have a real-time, state-linked financial profile. Who you are, what you own, where you spend, and sometimes even why you're spending, all tied together in one comprehensive data stack. Why are central banks and governments so interested in CBDCs? Officially, the reasons sound reasonable. First, efficiency. Digital payments can be faster, cheaper, and easier to settle across borders. Second, financial inclusion. CBDCs could give people without bank accounts access to digital money through simple apps or even offline devices. Third, monetary policy. Central banks claim CBDCs could help them respond more precisely in crises. Imagine instant stimulus payments straight into your digital wallet. Fourth, competition. As private cryptocurrencies and stablecoins grow, central banks don't want to lose control over the payment system or the monetary base. On the digital ID side, governments argue it helps reduce identity theft, welfare fraud, and bureaucratic friction. International bodies frame it as essential for digital transformation and economic modernization. All of these motives contain truth, but they conveniently underplay the side effects: increased central visibility, tighter control over transactions, and new levers of behavioral influence over entire populations. Let's tackle the fears you've probably heard. First, total surveillance. Every transaction logged, analyzed, and flagged. Second, social credit style systems, where your access to money depends on behavior scores, political views, or compliance with regulations. Third, programmable money that expires, can't be spent on certain things, or is frozen instantly at the push of a button. Are these fears pure fiction? Not entirely. Central banks and think tanks openly discuss programmability for targeted stimulus, spending limits, and automated tax collection. Some governments already experiment with systems that look uncomfortably close to social credit. However, not every country will implement CBDCs in the same way. Legal frameworks, constitutions, and public resistance matter. The realistic spectrum runs from mild upgrade to the current system, all the way to a tightly controlled digital cage. Your job isn't to panic, but to understand where on that spectrum your country is likely headed, and to influence that trajectory while you still can. It's important to separate CBDCs from cryptocurrencies like Bitcoin. Bitcoin is decentralized. No single authority can print more at will, reverse transactions, or freeze specific wallets. It's secured by a global network of miners and nodes, and its rules are transparent and hard to change. CBDCs are the opposite, centralized by design. The central bank issues, tracks, and can potentially control the currency. Some might use blockchain-inspired technology, but that doesn't make them crypto in the freedom sense. Another key difference is censorship resistance. With cash or Bitcoin, peer-to-peer transactions can be difficult to block. A CBDC system could theoretically block transfers to certain addresses, categories, or individuals in real time. This doesn't automatically make CBDCs evil, but it means they're powerful tools. Whether they become tools for efficiency or for control depends on governance, legal protections, and how much pushback citizens, civil society, and independent media provide during the design phase. Let's walk through a concrete scenario. Imagine a country rolls out a retail CBDC linked to a mandatory digital ID. To open a wallet, you must scan your face and provide biometric data. From then on, every salary payment, grocery run, and online purchase flows through this state-approved system. At first, it's mostly convenient. Instant refunds, zero bank fees, seamless tax filing. Then a health or climate emergency hits. The government introduces temporary spending categories. You get extra credits for essentials, but limits on travel or certain goods. Some sectors are flagged as high risk, and transactions there require extra approval or are disallowed entirely. Later, political tensions rise. Donations to certain groups are tagged for review. An algorithm quietly downgrades the risk score of people sharing wrong opinions online. No official law bans dissent, but payment frictions, delays, and account reviews make life increasingly difficult for those out of line. Now, a more optimistic scenario. A country launches a CBDC with strict privacy by design. Small transactions are treated like digital cash, recorded only locally on your device or anonymized through cryptographic techniques. Larger transactions require stronger checks, much like today's banking regulations. The law clearly states that individual transaction data can't be accessed without a court order, and bulk surveillance is explicitly banned. The code is open source, audited by independent experts. Digital ID is voluntary. People can choose between several identity providers, including privacy-focused nonprofits. In this model, CBDCs bring real benefits: lower costs, instant settlement, and easier cross-border payments for ordinary people and small businesses. Cash continues to exist in parallel, preserving an offline option. Is this perfect? No. Any digital system carries risk, but it shows that not every CBDC outcome is automatically dystopian. Design choices, legal safeguards, and public oversight genuinely matter, and they're worth fighting for. Digital ID is where many of the deepest fears concentrate, especially when connected to social credit. Officially, most Western governments deny any intent to copy China's model. But the building blocks, centralized IDs, behavioral scoring, real-time data sharing, are being developed worldwide. The danger isn't always a single, explicit social credit law. It's the gradual layering of risk scores, ESG ratings, travel permissions, and compliance checks, all tied to your identity. Private companies already run internal scores on customers and users. Connect those to a state-backed digital ID and CBDC wallet, and the line between private and public control blurs. Pay attention to vague terms like trusted identity, risk-based access, and harmful content. Combined with programmable money, they can evolve into quiet financial pressure, higher interest rates, blocked services, or delayed payments for people flagged as problematic, without a transparent trial or appeal process. So, what are the realistic benefits if CBDCs and digital ID are done thoughtfully? First, faster and cheaper payments. Cross-border transfers that now take days and hefty fees could settle in seconds. Second, direct government payments. Disaster relief, tax refunds, or basic income could reach citizens instantly with less bureaucratic leakage. Third, fraud reduction. Strong digital identity, if well governed, can reduce identity theft and benefit scams. Fourth, financial innovation. Programmable features could enable automatic rent payments, escrow, or complex conditional transfers without intermediaries. For developing countries, CBDCs might lower barriers to financial services. People with only a basic smartphone could hold secure digital cash without needing a traditional bank account. These are not trivial gains. The challenge is ensuring that the same tools that improve efficiency don't quietly normalize total visibility and fine-grained control over everyday life. Technology itself is neutral, the governance and incentives around it are not. How do you protect yourself in a world that might move towards CBDCs and tighter digital ID systems? Start with awareness. Follow what your central bank, finance ministry, and key regulators are actually publishing: white papers, pilot reports, technical standards. Many people get blindsided because they never read the source documents. Second, diversify. Don't keep all your wealth in one form or one jurisdiction. Consider a mix of assets: bank deposits, some cash, if legal and practical, possibly precious metals, and for those who understand the risks, some decentralized crypto. Third, practice good digital hygiene: strong passwords, hardware security keys, and skepticism about apps that demand broad data permissions. If digital ID becomes widespread, the security of your devices becomes directly tied to your financial autonomy. Finally, talk about this. Share information with friends, family, and colleagues. Cultural resistance to overreach starts long before laws are written. It begins with conversations and norms. Collective action matters. CBDCs and digital ID frameworks are often shaped in consultation periods, public comment rounds, and legislative hearings that most people ignore. Industry lobbyists and large institutions show up. Ordinary citizens usually don't. You can change that. When proposals arise in your country, read them, then submit comments, support civil liberties groups, and contact representatives with specific concerns: privacy by design, clear limits on programmability, legal protection for cash, and independent oversight of digital ID schemes. Support media, researchers, and technologists who are scrutinizing these systems. Demand transparency, open standards, open source code where possible, and clear red lines, such as explicit bans on bulk transaction monitoring without warrants. No system is perfect, but silent consent is the worst-case scenario. If citizens signal early and loudly that they expect digital money and identity to enhance, not erode freedom, policymakers will at least know that someone is watching and voting accordingly. Let's zoom out and distill the key takeaways. First, CBDCs are not just more of the same. They shift money closer to the state, making it more programmable and more observable. That creates real opportunities for efficiency and real risks for abuse. Second, digital ID is the glue that can bind your finances, online activity, and real-world identity into one profile. In combination with CBDCs, it can either streamline life or enable subtle forms of social control depending on safeguards. Third, not every CBDC plan is a dystopian conspiracy. Outcomes will differ sharply by country, legal regime, and public pressure. The same technology can be constrained by strong privacy laws or weaponized by authoritarian tendencies. Finally, you are not powerless. Understanding the architecture, diversifying your assets, improving your digital security, and engaging in public debate all influence how these systems evolve. Indifference is the riskiest choice of all. If you've watched this far, you're already ahead of most people in understanding where money and identity might be heading. Don't let that awareness stop here. Take a moment after this video to look up your own central bank's CBDC plans or your government's digital identity initiatives. Even a quick skim will sharpen your radar for what's coming. If you found this breakdown useful, consider subscribing to the channel and turning on the notification bell so you don't miss future deep dives on money, technology, and power. I'll be covering related topics like the future of cash, privacy-preserving tools, and how geopolitics is reshaping the financial system. Leave a comment below with your thoughts. Is your country's path looking more hopeful or more controlling? Have you seen local pilots or laws that worry or reassure you? Your experiences help shape future episodes, and they help others realize they're not alone in asking these questions.